I think I was probably a career mentor with that. Like who know of the innovation officer in the GI group. So that's where I was doing like that. I quit them in 2003 and moved on to my examples will be from the banking industry because that's pretty much the only industry I know. But one of the objectives I want to kind of achieve by the end of my talk with you is to interest more of you. If there are a few here who are already interested in the finance field, fantastic. But if there are, I want to interest more of you to take, well, we want to try and specialize in finance. Yeah? Okay. Shall we start? Okay. There's one hand that didn't go up there. You do? You don't want to be a CEO of a big company? No? Okay. Alright. Your best bet to get there, your best bet ability that if you are the CFO of the organization that you work, you will become the CEO someday. Because there are two people in every organization who know everything about everything in that organization. One is of course the CEO. The other is the CFO. The HR head will know the HR aspects, everything that there is to know about the company, about the HR aspects. But guess what? The HR head will, he or she will have to share with the finance head, the CFO at some point in time. The marketing head will know everything about marketing and sales and all the drumming of demand for the products and the business of the company. But guess what? It has to be run past the CFO. Because the CFO doesn't have the budgets to spend on advertising, for example, or no, that the person who holds the purse strings of the organization gives direction to the organization in a significant way, influences the direction of the organization in a significant way. Now, you've all heard of this English saying called Julius Caesar's wife must always be above suspicion. Have you? Okay. Can somebody help me with what that means?
I guess I forgot what was the conspiracy which is going on behind. It was planned by Brutus and Cassius.
If nobody doubted Sita's, if you can't doubt the CFO. CFO is your Julius Caesar's wife. If Julius Caesar's wife, if you start doubting her integrity, then Julius Caesar is forced to pay, for example, for its talent. So if you aspire to be CEOs in your lifetime, your safest bet or good bet you have is by going into the finance field. Sure. Purse strings of the organization, which is where the crux of the business. More importantly, they are the ones who have to get the blessings and therefore the approvals of, for example, the board of directors. So if you've got, let's say, your annual plan, your budgets, and you need funding to launch some new products, well, who's going to go in front of the board to explain it? How much funding are you going to get? What are going to be your returns? Is it going to be worthwhile? Should we invest? Who's going to do that? The CFO, not your marketing person, not your product development person, not your production person, but your CFO is going to do that. And therefore, because of the sheer visibility of that role, you stand a very good chance of getting into the CEO, managing director, whatever that job is called, into that position. And so if that's where you want to get, this is probably one of the, but to get into that domain, what are the types of roles that you can expect? And you can choose to specialize in different aspects. Well, one of course is that you have in any organization, in the finance field, you will have accounting and taxation as the backbone of the finance. You will have it. It is, you can't say, I'm in HR or I'm in marketing. Let's say HR, and you've got to be in the finance field. You've got to know at least the basics of accounting and taxation. So that is one vertical that you need to understand very well. The other thing that many people tend to ignore is, and especially in a bank, is that there is an aspect of finance which I call financial control. You've heard of, how many of you have heard of Enron? All of you. Must be a case study in your school, right? So what happened to Enron? Come on guys, all of you know the story, right? What happened to Enron? Girl, to be precise, an intern in the finance department asked what was very, very innocuous question. Because what she buys, the very first transaction, what she bought from me is not a sale at all because it's left pocket, right pocket. Right? So this very young student or intern in Enron asked this question. There is something called intercompany accounting, and there is an international accounting standard on that, where you're supposed to net this off, and your sales have got to be zero. Your net figures net sales is zero. She asked the question, and people said, hey, she's right. That bank of about 50,000 employees, a balance sheet of a few tens of billions of pounds, was sold for £1. That's only because the financial controls broke down. And he was able to wipe out the bank single-handedly in a matter of days. He was investing on the Tokyo Stock Exchange, making investments on behalf of the bank. The share market tanked. He didn't want to report his losses, so he hid his losses in a suspense account that he thought that nobody was going to look at, thinking that the next day he will recover his losses and nobody will know. The next day the market tanked even further. His losses kept rising, such that one single suspense account had a balance in that account which was bigger than the bank itself. When they found out, he was nowhere to be found. When the bank found out that there was a problem after the weekend, he was nowhere to be found. He ran away to Bali with his girlfriend. He was arrested. He knew that there was an Interpol watch out notice for him. So he tried to escape from Bali. The minute he landed in Thailand, he got arrested. He was sent across to Europe and he died in prison. And that was only because that financial control of that bank just collapsed. They were just not watching the stuff. The third and foremost is your management information. So you've got to know where are you making your money from, right? If you don't know where you're making your money from, which markets, which products, which customer segments, you're not going to be able to. And I'm not talking about sales. I'm talking about profits here. If you don't know your profits, where your profits are coming from, you can't control your business, like any business. You've got to know which is your most profitable segment. You've got to know which is your most profitable geography. You've got to know which are your most profitable products. If you don't know that, your business is doomed. Right?
The accountant to handle the accounting practices?
Well, Bank of England, close enough. The whatever, what do you call it? Governor of the Bank of England, something like that. That's a rumor, and I think he's supposed to be from a stupid institute called IIT Delhi.
Brilliant minds. So
Do you
maybe
want
it's
to,
not a categorical
do you
answer.
want to follow the losers or do you want to follow the winner?
I mean, like as the archetypical CFO, is he an accountant or not?
I don't think there is. This depends on your interest and how passionate you are about learning that subject and on enhancing your knowledge. It can be done. It will. That's where you end up being.
What are the criteria to become a financial risk manager?
Financial
Risk manager.
risk manager for from what aspect? From a business perspective or from a
Business.
okay? That is how to become a okay. That's not my job, by the way. Yeah, that's not what I do. But advising clients of the banks who are selling. So let's say you're selling insurance products, and banks sell insurance products to their clients, or even mutual funds. You have to get certified to sell that, depending on what products you are responsible for selling. Right? The reason being that, like other industries as well, banks.
So, do you think that was the reason why HDFC Bank has overcome ICICI Bank, as previously ICICI Bank didn't have their credit team who has the Department of Investigation about the background of their customers to lend them loans and all?
Banking is about lending, right? And therefore it is about credit risk. In fact, it is probably the topmost risk in any financial institution. When you lend to somebody, will you get your money back? And if you can answer that question successfully, that much better you are as a credit risk manager, right? Or a person who understands credit risk.
Questions. First one is like small banks are getting acquired or merged by the bigger banks. So is there any strategy behind this thing?
What do you think?
Moving the competition.
Maybe removing the competition from the market?
Yes. Yes. But often, yeah, just statistically, and I'll just get rid of the statistics, mention it and then get rid of it, is that about 90% of all mergers and acquisitions destroy shareholder value. Yeah. The shareholders of the acquiring company and the acquired company, both, in 90% of the cases, lose money rather than make money. They don't become richer, they become poorer. Yeah? Wherever there is a merger acquisition kind of situation.
In small Ujjivan bank, maybe not this small financial bank which is coming.
A small finance bank.
Yes, exactly.
Okay. See, before I answer that question, I want to ask all of you a slightly more generic question. How many of you know the banking ecosystem in India? How many of you are kind of familiar? You actually are, you just haven't, thought of it that way. So how many types of banks are there? Versus the private sector, there are private investors who own it, right? So that's an ownership, leave that. But in terms of the nature of business that they do, right? So these are just some types of banks.